Okay, so just before we get into the specifics of the charts today, what's your overall assessment of today? What's been happening today?
We're continuing to move higher. I mean, we touched the high today in the S&P and getting really close to the high, all-time high on the NDX.
Why do you say that we are continuing to move higher? What do you see that tells you that?
Oh, well, my Able Trend charts. I mean, for sure. If you look at let's take the 3 minute chart out of play for a minute because that's not long term to me. But
Right.
so let's just go to the 30-90. We've got 90-minute support and 30-minute support, and it's been bouncing off of it all the way up this channel here. You can see it. It's been bouncing all the way up. If you move over here to the 60-minute 180 chart, same thing. You've got 180 support, and you've got 60-minute support, and
And
then
what I see there too is we've been stair-stepping higher.
yes,
Been stair-stepping
yes.
higher for several days.
That's right. And stair stepping means, each level moves up like a set of steps. You can walk right up the
Yes.
steps. So, and then the 120 daily the same way. I mean, you got daily support and you got 2 hour support, which is I mean it's been steady riding that all the way up. So that's why I think we're going to go higher personally, but might not.
So
But
on those three longer time periods, the 30-90, the 61-80, and the 120 daily, there's absolutely nothing yet that shows weakness in the trend.
no,
It's all double
no,
stacked. In fact, the only weakness is really just pullbacks down to the sweet spot, pulling back down to support before it goes higher again.
that's right. That's exactly right.
All right, so when it pulls back down to support, are there opportunities to take profits on those moves down?
Oh yeah, in other words, if like let's just give you an example. Let me find a great example. I see several
Well,
really. So let's just
look at that right there to the right.
yeah, right here,
Yeah.
right there. Yep. Yeah, technically, I mean this bar right here, this happened on the 29th of July. It pulled back the sweet spot. The next blue bar out that forms to the upside, which that did because it opened and closed right the same spot. You could have went long right there. That's a valid signal to
Yes.
go long right there at 47.30, and now you're at 47.67. That'd have been a very nice move,
No, back.
especially.
Oh, go ahead. Sorry.
No, you go ahead.
Well, back up to the left from that signal then. Back up to the first green bar. Keep going to the left. Right
Right
there.
there. Hmm.
Any signals that come on that tell you that we might be moving back down to the sweet spot on the long term?
Yeah. I mean, It's closing at the bottom of the range. Each one of them are, but I still would not. I still would not make a move on that personally. I'd wait till it got to the up to where it started turning up.
But isn't that where the short-term signals come into play? So we talk a lot about
Yes.
the 3 minute and the 5 minute signals. And even though we may be trending higher or we may be trending lower, you can take a trade that is in a cycle that is in contradiction to the trend, or it's the opposite of the trend. So on that green bar on the 3090 that you have highlighted right there, it's possible, and I'm not going to go through and specifically find the signal, but it's possible that you might have seen a sell signal on the 3.9 or the 5.15 there. Is that possible?
Yes. Okay. I follow what you're saying. I thought you were talking about this particular chart here because I said you're looking at the wrong chart that I'm looking at. I thought you were talking about the 3090 chart with the sell signal. I see what you're saying. Yes. Yes. If you had a sell signal on the 3 minute, 9 minute chart, and you look at this chart, there's plenty of room for it to move down to support. 47.35 down to 47.25. That's 10-point move. So that's plenty on a 3 minute, 9 minute chart.
10-point move on a NDX trade that has a delta of 50 or more is a good opportunity
Nice.
for profit, right?
Yeah. Yes, it is.
And we're
Yes.
typically looking for somewhere, I'm going to say between, depending on the nature of the trade, depending on whether it's you or me, we're looking for somewhere generally between $1.50 and $4 a profit on a
Yes.
trade.
That's
So
correct.
that right there is a great example of a trade that, although we're trending higher, stair stepping higher, pretty confident based on the long-term able trend signals that there's still strength to the upside. It doesn't mean that you're out of commission in terms of taking downward bias trades. Uh,
Right.
and so now look at the 3-9 minute and look at the sell signal that came on
Right here.
right there, right?
Yes.
Now we wouldn't have taken that because you got support right underneath us.
That's right.
But then when support quit printing, you've actually got a movement lower that could possibly have ended up being a trade. I'm not here to explain exactly whether or not that would have been a trade here. I'm here to open people's eyes to the fact that you've got these signals, very short-term time frame signals. We use a chart that's provided, service that's provided by AbleTrend, and they use 2 time periods on the chart, 3-9, 5-15. Those are the 2 time periods that we use, our short-term time periods. So on that 3-9 that you're showing, Michael, it shows 3-minute support and resistance, and it shows 9-minute support and resistance. And the red and blue dots help us identify when we are trending higher versus when we're trending lower. And let me back up and use a different word. I don't really mean trend because it's the long-term signals. It's the long-term time frames that tell us what the trend is. It's the short-term time periods
Yes.
that tell us what the cycle is, what the cycle
Yeah.
is within that trend.
Yes.
Let's
That's
look at
right.
SPX.
Refresh to make sure.
Let's look at the
Okie
longer
dokie.
time periods first.
It's there.
So
There you go.
a little different picture than
Yeah.
NDX.
Yes.
Let's start with the longest time period. We are double stacked to the upside, but it's not really
Yes.
stair stepping significantly higher like NDX was.
No, sir. No.
Um, the 60 180 is also double stacked, but it's got a little bit of a step higher here a few days ago, but not significant like NDX. But they're definitely both showing double stack to the upside
Yeah.
pattern.
And also, Mark, some that it sticks out in my mind because I've been trading AbleTrend for almost 2.5, 3 years now. Look at how many buy and sell signals you had right after each other. Bam, 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 bam. That's choppy, choppy, choppy right there. That's obvious. You can see what's going on right there.
Mhm.
So you look back to NDX, you don't see that. So SPX just been really, really back and forth the
So,
last couple through well, last couple of weeks really.
so now look at the 3090. And what are
Yes.
we seeing? We're seeing actually a double stacked pattern to the upside, but
Hmm.
the current 30-minute bar is showing a sell
Yes.
signal.
Yes, it
And
is.
we just printed a 30-minute resistance,
Yes.
but it's sitting right on top of 90-minute support.
Yes.
So in my interpretation, Michael, this is a situation where it's like the alarm clock. It just woke you up. You want to pay attention to that, but there's really nothing you need to do just yet
That's right.
because you've got support right underneath you. I wouldn't want to take that signal and trade it. And just to emphasize, we don't trade the long-term signals anyway. We trade the short-term signals. But I think it's very important that you are alert to the long-term signals, alert to what the patterns are telling you so that you have a full story. I hate for traders to jump into a trade based on very short-term signals and they are completely blind to what the big picture is telling them. You know,
Yes.
it's like if you bought a house, Michael, and you love the house and it looks so beautiful in the yard. There's this tall front fence around the yard, and it just is amazing, and you can't wait to get that house, and it's a great deal. And then you sit down and take a look maybe at the Google Earth program and see that there's a toxic waste dump on the other side of the fence. You want to have a big picture view of what's going on any decision that you're making. And the long-term signals on AbleTrend allow us to have that. We're not using them to make trade decisions, but we're using them to improve our understanding of the trade that we're taking.
Yes.
So when you look at the 3-9 now, what happened earlier today? Sell signal?
Yeah, we had a great sell signal right there, but once again, we'd have to wait a little bit before getting that trade. But yes, you got a sell signal, and you got a buy signal right here, which was really not that good because we got resistance we're sitting right against. So
So again, very short-term choppiness right there.
yeah, it is. Yes.
How about RUT?
Refresh that.
Okay, longest term time period.
Yep, it looks like we're still stacked to the upside for sure. I mean, we got
Double stack, stair
double
stepping.
stack. Yes, yes, we are.
6180, same story.
Same story.
What about
Same
that
story.
sell signal in there? Is that something that we
What?
would have paid attention to?
Nah, we'd have paid attention to it, but there's no trade there because we got support underneath of us.
And support continued to print, and then
Yes,
the
to
red
the
bar went
yes,
away and reverted back
yes,
to moving to the upside.
yes.
What about 3090?
We are right on 90-minute support. The 30-minute supports went away. You can see that right here. It's not printing anymore. So
And that right there is a good example of perhaps the pattern starting to weaken a little bit.
yeah,
30 minute has quit
yes,
printing.
yes.
It's not a tradable signal, but it's again a
No,
data point in terms of understanding the full view of the trade that you may end up taking. And the
that's right.
trade,
And it always
go ahead.
go ahead. It always starts though. I mean, it's just like clockwork. Just about. I always go 3, 30, 90. I mean 60, then 120, because you'll start seeing it break down earlier on the smaller time frames. Then you'll
Right.
see it follow through another. So,
Well, and that's
which is
why it's
very
important to pay attention to those signals
yes,
on the 3.9 and the 5.15. We're not showing the 5.15 here, but we're showing the 3.9, and we make our decisions mostly based on the 3.9. So
yes.
what are we seeing right now on 3.9?
Well, it's support. It's in between support and resistance still. I mean, we'll wait. It's still printing. That signal here started. Yeah, so it's almost that signal has stopped. To be honest with you,
Pretty tight
um,
range though, right?
pretty tight range. Oh yeah, very
Very
tight range.
tight range. Look at the most recent 3 minute support.
Yeah, it's
Where did
right
that
there.
where did that print at?
Looks like around 12.18 and 3/4, and then 12.18 and almost 12.19. Yes,
I mean,
that's very tight.
they're pennies apart. Support and resistance are pennies
Yes,
apart.
yes, they are.
Okay, so the takeaway here, folks, is understand what your big picture view is telling you. Understand what your long-term charts are telling you. Understand uh, that you may be in a trend and what that trend is, but don't be fooled into thinking that you can only trade in the direction of that trend. A lot of people will say, the trend is your friend, and I agree with that. But here's the power of AbleTrend. The power of AbleTrend allows you to trade cycles. The power of AbleTrend allows you to trade a downward cycle in a rising trend. The power of AbleTrend allows you to trade an upward cycle in a declining trend. You have to understand how to do that properly, and that's what we teach in our Profit Accelerator course. But you have to understand the proper placement of your strikes, proper placement of your expiration to take advantage of that. But in my 30 years plus of trading, the AbleTrend charts have really been some of the best I've ever seen. And I would say it's like opening up the door to your own personal little bank. Because if you are consistent and disciplined about taking the signals and you set your motions, check your motions at the door, and you just follow the signals, you're going to be very successful with this. Let's jump over to bar charts here just for a minute, because for me personally, and this doesn't apply to everybody, but for me personally, bar charts are another element of that big picture macro view of what's going on. You want to give me screen control, Michael? Okay, thank you. All right, so here's NDX, okay? We're still trading in a sideways pattern identified by the red channel. Now, a couple weeks ago, this was a mostly sideways pattern with a slight slope to the downside. Now it still is a sideways pattern with a slight slope to the upside. And the reason for that is because I've done a slight modification to capture today's high. You can see here how we've continued to climb. Each day, almost every day, is a higher high. All right, so I'm not just trying to play a game here where I'm drawing lines until I'm happy. What I'm doing is I'm waiting for the market. Now think about this. I'm waiting for the market to tell me where it wants to stop. I'm not trying to guess where it's going to stop. I'm not taking trades based on I think we've stopped. I'm not trying to call tops and bottoms here for my trades, but I want the market to teach me now. I want the market to teach me and tell me exactly where it's going to choose to pause and form the next declining cycle. Because here's the one absolute I know in trading the indexes. Absolute, unwavering absolute. There will always, 100% of the time, be a declining cycle after the completion of a rising cycle. What we are in right now is a rising cycle. You saw that on the long-term Able Trend charts. That's the stair-stepping higher approach, the double stack to the upside. You can see it on a bar chart. You're seeing bars that have higher highs and higher lows. You can see since the 27th of June, where we traded at a low of 41.79, we've traded up to a high today of 47.28. I'm sorry, 47.67. 47.67. So that's a pretty significant move higher. It's over 600 points higher, and that's pretty significant in 1 month. When is the next down cycle going to start? I don't know. But I'm doing this to learn and understand at all times whether we're in a rising trend or whether we're just in a rising cycle. And what will happen on the next declining trend will be there will be rising cycles within that declining trend. For me personally, and this is just a way I differentiate in understanding whether I'm following the trend or just following a cycle, I want to know what the trend is versus the cycle. Right now, the trend is a slight uptick to the upside, but mostly sideways. That is the long-term trend right here, sideways pattern. And it goes back and ties back to the first high in this pattern, which was in early November of last year. Within that trend, that sideways trend, there is a rising cycle, which is in itself a trend. And within that rising trend, there is a rising cycle. So everything's been moving to the upside. So I've been modifying my sideways channel each day, just waiting for the market to tell me where the top is. And at some point, we're going to see a declining cycle, and that's going to start within the context of this channel, most likely, the sideways channel, most likely. And then we can start to do some possibility projections of where could we possibly move down to. Is it going to be a 32% retracement? Is it going to be a 61% retracement? Is it going to be a 50% retracement? Will we move all the way back down to support of this rising cycle that sits inside the channel? Would we move all the way back down to sideways support? I don't know the answers to any of those questions. But once we start to develop the next downward cycle, after we have confirmed the next natural level of resistance, then we will know where we stopped. We'll know how strong this pattern was. I've also added one other trend line here, and this is a sideways price level identifier. This line right here is coming off of March of 2000, where NDX hit its all-time high. March of 2000, where NDX hit its all-time high, 48.1635. That was the NDX's all-time high, 48.1635. So with today's high being at 47.67, we only need to be up another about 49 points. Let's call it 50 points from today's high, and we'll be at the all-time high for NDX. Why is that significant? because although we could continue to move higher, and I would expect that in a strong rising market, we're going to set new highs, you start reaching up into the lofty areas of all-time highs on the indexes, and there's a natural level of exhaustion that starts to develop. And so we've been in a pattern for a month, rising pattern. That's quite a while to be in one very strong rising pattern. We have only 50 points of movement off of our all-time high, and those are factors that start to hint towards a decline. Now, I want to be very clear about this again. This is not trying to identify where to open a trade or when to open a trade. We're using our 3, 9, and 5-15 minute timeframes on AbleTrend to make those decisions. This is more about saying, I want a bit more information on what the trend is, where we're trading compared to resistance, support, all-time highs, all-time lows, and I want to have a visual. When I wake up in the morning and I start looking at overnight futures on the indexes, I want to have a visual in my thought about where the futures are projecting we're going to open for that day and where that is relative to both my short-term and long-term charts. So I don't know when we're going to hit the next natural level of resistance. It could be today, or it could be 2 weeks from now, or a month from now. We'll know when it happens because we're going to see a series of price bars that will be pulling away and will break below support of this rising cycle. When that does occur, we will have movements higher, and those are going to be movements higher all within the context of a declining cycle. I want to know that because when I'm placing a trade, I make a choice in my personal trading about whether or not I want to be more aggressive on the entry of this particular trade or more conservative. If I'm placing a counter trend trade, I'm much more conservative, meaning the trend right now is to the upside. If I place a declining bias trade, I'm going to be more conservative on my entry. I'm going to wait for confirmation of the AbleTrend signals, and I may jump out of that trade more quickly. Remember before I said, depending on whether it's Michael or me trading and what our attitude towards the market is, we're looking for somewhere between $1.50 to $4 of profit. Well, if I'm placing a counter trend trade that is fully confirmed and it's a conservative entry, I may jump out for $1.50, maybe $2 of profit. If I'm placing a trade that is following the trend, I might have a bias towards a slightly more aggressive entry, and I might hold that trade a bit longer for a bit more upside profit. That's the way I personally approach it, and one of the main reasons why I want to have a clear understanding of where we are trading relative to long-term trends, long-term patterns. If I pull up an all time period on NDX, you're going to see what I'm talking about. March of 2000 was the all-time high, 48.1635, and you can see where we're trading right here. You can see where we're trading relative to that. You can also see what happened starting in April and May, and then on into the fall, and then after that. I'm not predicting that something like this is going to happen, although we would be foolish not to have our eyes wide open to history. An ignorance of history almost certainly will cause us to repeat in not necessarily a positive way. So let me look at history. Let me see where we are trading relative to my long-term history. Let me look at what happened after we hit that high. I'm not predicting that same occurrence is going to take place, but I want to be alert to it, and it will influence the types of trades, how long I hold on to a trade, and again, whether I'm conservative or more aggressive on my entries. I won't get into as much detail, but let me just take a quick look at SPX. Now SPX, and this is what's fascinating to me, Michael, is you showed SPX and you mentioned how choppy it was. I think your technical
Yes.
term is chip chop on the pattern. Um, but
Yes.
but we saw it very clearly on the long-term and short-term time periods. And now when you look at the bar chart, just to have a one simple view, it's not a surprise at all. Look what has happened specifically since the 20th of July. We have had now, see, 3, 6, we've had 9 days where SPX has run smack dab into that line of resistance. I've not modified this line of resistance in a few days. So today we ran right up against it again. Now, one of these bars is going to be technically the highest of all those bars, but here, just from a purely visual standpoint, look at how all 9 days, the last 9 days of trading, have really flattened out. At least as of right now, we've not been able to break above this line of resistance. And even the 4 days prior to that, although they were a little lower in terms of their highs, you can see that there was a line of resistance that they were having a hard time beating, getting above. And this is after SPX stepped pretty strongly to the upside, took a little breather, stepped strongly to the upside again, paused, jumped a little bit, and now I think we're seeing the skydivers ready to jump out of the plane here right now. So one other factor I see here is that today's high was 2178.29. I believe that's a new all-time high for SPX. It's not significantly higher than the previous all-time high, which was 2175, I believe, 2175.68. Did I get that right? 2175.63. So we are up about 2.5 points on the all-time high today. So today is a new all-time high, but you can see where the bar is closing, where the price is trading relative to the entire range of the day. And that is showing that we're in the bottom 50% of today's range, which means that we could possibly be forming a bearish divergent bar. Once again, I'm not hanging my hat on whether or not we are stalling here or whether we're moving higher. I'm not one of those traders that's going to take a trade because, yeah, everything's going to go down and then worry all night long, wondering if it's going to be higher. Those days of trading are gone for me and have been for 25 years. I want to trade based on a very simple set of signals that are so reliable that we've come to depend on them for our trading almost exclusively in the live trading room. Those are the Able Trend signals. So it's interesting for me to see the chip chop pattern on the long-term Able Trend charts. It's very interesting for me to just visually see a simple line of resistance that we've been butting up against. But at the end of the day, you're going to take the 3 and 9 minute and maybe the 5-15 minute charts on Able Trend, and you're going to make your decisions on whether to get in to a trade simply based on that. And then RUT. RUT is reasonably similar to SPX, but it's been climbing a little more steadily. But you can see here it stalled out at a pretty consistent resistance, stepped a little higher, and for the last 4 or 5 days, it's been trading at a level of resistance that we can't seem to break above. So this is the way I like to go through and assess my patterns. I like to have a clear picture of what exists if I'm going to take a trade. I'm not bashful at all about taking trades to the upside or downside. It doesn't matter what the trend is, as long as the short-term signal presents itself, is confirmed, and I know based on the trend whether I'm going to take a more aggressive entry or a more conservative entry. And then I'm not going to get into it right here. We talk a lot about it in the live trading room and in our Profit Accelerator course, but that cycle relative to the trend and knowing which direction the trend is versus the cycle also is going to influence my placement of strikes when I open a position. It may even influence the strategy that I choose to trade. But if I was just going to do a day trade and I was going to trade a long call or a long put, simply understanding whether we are in a declining signal, which is a cycle inside of a rising trend, is going to influence where I place my strikes versus if it was a declining trend and a declining cycle. So it influences the strikes, it influences the position, it may influence the amount of time I allocate into the position. All these factors come together so that we can be as productive and as successful as possible. Michael, have you taken any trades today? I've been out of the room most of the day. I've not personally
Yeah,
taken any trades myself.
yeah. I opened up a 47.25 put calendar and actually opened up a 4,800 call that I'm still holding, and I think I've got a put or two in here. I think I'm not sure. I called them out. I can't remember, Mark.
Okay. So
Sorry.
you've got a couple of positions. You have
Yes.
one declining bias position. You have one rising bias position.
Yes, I do.
And I noticed, again, I'm not interested in getting into all the details right here in this summary, but notice that he has one strategy, calendar spread that he used for the declining bias position and a different strategy that he used for the rising bias position. And that's all just, first of all, it starts with personal choice as a trader. Secondly, it's a decision each trader has to make as to how much capital they're going to put at risk. And then it's a matter of following the signals and understanding short term where that signal fits into the big picture macro view, and then making a decision as to what strategy you want to take. And then, of course, he had to choose the strikes, he had to choose the expirations, and of course, he stayed within his guidelines, his personal guidelines as to how much capital he was willing to put at risk. So um, that's our summary for the day. Not a lot really has changed since Friday. There have been some trade opportunities, but in terms of the pattern, I personally am still in a wait mode for the market to truly define a top in this current cycle. NDX shows to me that it's the strongest climbing index we have. SPX looks to me like it's getting, it's experiencing some exhaustion, hit a wall. RUT looks like it may be there also. So we may be starting to see the beginnings of that top, the definition of that top, but where a lot of chart technical analysts will try to tell you, well, this is going to be a top or this is going to be a bottom, and it's based on these factors. We don't do that, folks. We don't try to call tops and bottoms here. What we're doing is we're waiting for the market to tell us what it's going to define itself as a top or what it's going to define as a bottom. And frankly, if you learn to want what the market wants, your trading is going to be a lot more powerful and a lot more profitable. If you learn to understand to read what the market is telling you rather than swimming upstream and fighting against the market, you're going to have a lot more peace of mind and you're going to enjoy your trading a lot more. If you learn to understand what the macro view is by what we've showed you here today, and then use your short-term trade signals off of AbleTrend, you're going to have, I believe, some of the most profitable trading that you've ever experienced. So that's my 2 cents worth for today. Michael Kastner is the host of our live trading room every day, and he does a phenomenal job at helping people understand what we're doing, calling out trades. We profile one account that is a live account. It's my money, and we trade in that account, and these are live trades. And in addition to that, so everybody in the live trading room can see that account. But in addition to that, Michael does a lot of trading in multiple personal accounts of his, and Allison, one of our other team members, she does trading in her personal account. And when they're placing trades, they will call them out to the room. You won't see those trades because they're not going to show their private accounts here, but they will call the trades out to the room, and you can follow along with those if you choose to. But we're happy that you're here. Those of you who are just visiting, maybe for a week, thanks for stopping in and spending some of your time with us. Those of you who are with us all the time, it's you guys, you ladies and gentlemen, who make trading much more enjoyable and a lot of fun rather than just kind of being isolated on your own. Michael, any last thoughts?
No, I think you covered everything. I just we're right against support again. I mean resistance again on the NDX again. So it sold off while you were speaking. So a little bit. It came off that high. So just we'll see what happens.
It'll be very interesting to me, Michael, to see whether or not we actually reach up to that 48.16 level.
Yeah.
48.16.35. That's the all-time high.
Yes.
Now, at the end of June, when we traded down to a low of 41.79, would you, on that particular day, have thought that a month later we'd be trading up to almost the all-time high?
Probably not. No, sir. What
Yeah,
what day was that? June, you said?
it was June 27th. June 27th. So
Wow.
there are signals, there are trends, they're short term. Folks, if you really pay attention to what you're doing and you immerse yourself in learning this, it may seem a little overwhelming at first when you look at it, but after you've traded it for a while, the recognition of the signals becomes almost second nature to you. You're going to know when to get in, you're going to know when to get out, you're going to know when you should stay in and ride the trend. It just then becomes a real um, moneymaker for you. So thanks for being here, everyone. And Michael, thanks for
No problem, Mark.
taking such
My
great care
pleasure.
of the room.